Welcome back to another episode of the Ali Show, a monthly podcast from Becktrend, where you can expect to hear about real challenges credit and AR professionals face in the industry. I'm your host, Ali Kidwai. I'm the Director of Product Engineering and Implementation at Becktrend. In my role, I work a lot with our partners, customers, as well as vendors to solve problems in the industry and work on solutions that help credit and AR professionals help do their job better. Today, I have a very special guest with me, Andrew Malueg from Amcor. Andy and I had a very interesting discussion at the prior CRF, actually about bankruptcies and how to combat them. And Andy has a lot of experience in that arena. So we wanted to get together, to talk about what Andy's seeing in the industry from his perspective, as well as Amcor's perspective, and what credit professionals can do to prepare for the road ahead, whatever that road ahead looks like. So really, thank you for joining us today, Andy. Really appreciate it. Why don't you go ahead and introduce yourself? What your background is, what you've done, and what you currently do at Amcor.
Sure. Yeah. Thanks for the invite, Ali. My name is Andy Malueg. So I work for Amcor Flexibles North America, division of Amcor PLC. So I handle a segment of the business based out of Oshkosh, Wisconsin. So my journey to Amcor, I started out in banking. All my roles have been in credit or portfolio management for the last 6 years. I've been a manager of credit, collections, and cash application. So, and I just love it. I love the mix of finance, negotiation, and problem solving that I get to do every day. So, appreciate the offer to be here, Ali. So.
Well, I'm the one that's lucky to have you. But yeah, thanks for that intro. Could you explain a little bit to the audience, like what Amcor does, like what kind of business
Sure.
they're in, and how does that relate to sort of your job, who the average customer is, and like who your suppliers, vendors are?
Yep. Globally, we are a $15 billion company. We have 13 segments. So anything that you buy probably comes in something of our packaging, unless it's glass. So what I handle out of North America is 5 segments, primarily anything that comes in a bag or in goes up from a garbage bag up to the most sophisticated medical device packaging imaginable. So
Oh wow! Well, I
the,
didn't
the
know that.
extreme the extreme gambit. So handle um, about $5 billion in sales annually, and that's getting bigger with the Berry merger. So that's very exciting that we have coming up. Very excited to have Berry on board with us. Very complementary product offering. Wherever
Yeah,
they were strong, we were sort of weak, and vice versa. So we are ready to take on the world and solve everybody's packaging needs. So in North
sounds exciting.
America, yeah, in North America, if you go into the grocery store, um, everything you buy could have an Amcor product on it, except for a glass jar. So we're everywhere. So
Very nice. You must have a like a wide variety of like customers. Like I mean, just the two off the top of your head, you said like grocery stores
yep.
and medical devices. Like, how do you sort of manage that throughout? Like, like being in credit. Like, how do you manage like having like different customers like that?
Yeah, it's interesting for sure. So with the medical device division, especially, so the pandemic, the biggest companies just got bigger. So
Yeah,
you're dealing with them globally now, and they need to be serviced globally. So they come to Amcor for that. And then another part of the medical side is all the new and cool tech is coming from startups. So they're
yeah,
surviving for years off of just seed money, right? So you got to
yeah.
work with them and get comfortable. Do they have the funds to make it through their trial so that whatever idea they come up with, that it'll make it to to the market where they can sell it, and then
Yeah.
that's exciting. So it's like you're part of these new and exciting technologies that are coming out constantly. And then outside of the medical space, would deal with um, the food and beverage side. The huge companies, those brands aren't really growing. So the trick
Yeah.
is, um, what small and medium sized company are you gonna put a deal together? Because these companies don't have the funding behind them either. So, but how are we going to put a deal together to balance risk and reward, right? What data, what information, what third party secret sauce can we use to identify these customers um, that's worth the risk, and the ones that hopefully protect us, right? So that's the exciting piece of it right now.
Very interesting. What would you say? Because we have a couple of customers in packaging, and obviously trying to work on you as well. But what would you say credit is like for the credit and AR is like for the packaging industry? So, like, what would you say are some key differences you've seen, or some things that are actually similar to all of them? All the other industries, like, what would you say, like, given like you've been there for some time, like, what would you say are a couple of key differences and similarities, and how would you
Sure.
say one should manage credit for the packaging industry?
I will say, outside of banking, I've been in packaging industry and the credit collections. Um, so we are lucky. I guess we are a very high priority for our customer. They can't sell their product without our stuff protecting it. So we sometimes get paid before the banks do, but that also um, has some risk, right? Timely payment doesn't mean financially stable customer. So we need to rely
Yeah,
on outside indicators of risk, because we can't just rely on, oh, we're getting paid our bills. Um, they're coming in just like clockwork, but they absolutely need our stuff. They could be stretching somebody else out, the bank out,
yeah.
and um, have to rely on outside information as well. So,
Taking time bomb.
mhm.
We always say, like, when an end customer goes bad, like, he's not gonna stop paying like everybody bad at the same time. He's gonna like slow roll people and sort of
Right.
go from there. That's interesting. What are you seeing? I mean, it's like going off of our conversation from CRF. Like, what are you seeing right now globally? From a supply chain, payments, as well as general. You know, uh, what do you think uh, is going on in the economy right now from that perspective? Do you think that is your read on the economy that things are getting better, things are getting worse, and what does that mean from Amcor from a supply chain perspective and for your customers even? Because you said you
Sure.
have to service them globally, right? Like,
Yep.
so I'm sure the tariffs are not helping.
No,
Yeah,
no, that we can just tackle tariffs right away. It, that definitely negotiation. A lot of discussion needs to be had with your customer. Um, are How do they want to get billed? Will they even pay for them? Right?
yeah,
Do they want to increase their price? Do they want it a separate standalone invoice? Um, so sales, marketing, pricing needs to be all involved. The customer especially, and then if you think you got that figured out, and then all of a sudden customer doesn't want to pay those invoices, the tariff invoice, is that a reason not to start to do business with them, right? With all the
yeah.
noise, are we going to, depending on the day, are tariffs still here? Are they going to be refunded by one of the countries or not? Um, but yeah, it's another interesting part of the job, right? You're talking to a lot more people, getting more knowledge about things I never thought I'd have to worry about, tariffs.
Yeah.
So it
We we didn't think that our, like, obviously we have a wide customer base, like, in everything. And like, we've seen some like customers in distress. I mean, more on the smaller side, but still, like, they buy product from outside, and you're buying something for $10 a pound, and tomorrow it's 1,000. Like, how are you going to
right,
stay in business?
yeah.
Uh,
Some of the stuff we need for uh, some of in the healthcare, especially the packaging, there's only one plant in the world that supplies it.
Oh,
So
really?
yeah,
Where is
it's it's over in Asia, a specialty foil that that during the pandemic we had to air freight over. So you're putting these rolls on airplanes and flying them over, and then how do you pass along that cost? Because putting these 1,000 pounds of material on a plane is a lot more expensive than putting it on a ship. But now you can't wait
Yeah,
for the ship to get unloaded and everything. But that sort of ties into the supply chain, right? Um, we as a manufacturer, we had to broaden our supply chain, our suppliers who supply us to keep our customers happy, and our customers had to do the same thing. So
yeah,
that adds another little twist to this whole thing. Um, wanting to be tight on credit, your customers have or should have another supplier that they have ready to go. But don't let that be a reason to keep making what you believe without your data bad decisions. Right? You need to do what's best for your company, and if the customer does leave, um, hopefully you made the right call, right? And then you're protecting your company and doing all that you can. So
yeah,
and then onboarding new companies in this time, um, getting all the data you can, so you're not taking over someone else's loser, right? That are getting
yeah,
fired by their primary vendor.
yeah.
So it's so it one of the best parts of the job, right? It's never the same. There's always a new challenge. So, but
Interesting. How would you say, like, given everything that has happened, you have had to change your AR policy and your credit policy? I mean, some of the things that you mentioned, right? Like, sure, you would have had to increase your data sources, like things
mhm.
that you look at, like, for customers, because, like you said, you don't want to be taking on somebody else's loser. That's one. But what are some of the biggest things you've seen, like, this time around? Changes that you've had to make in your policy, or things that you just have had to do ad hoc while just doing regular credit tasks, like doing reviews on a customer, right? Like, you have an existing customer, you're doing reviews on it, or you're looking at payments and seeing how you're trying to set them up on a payment plan, or onboarding new customers. Like, how what are some differences you've seen this time?
Yet the biggest difference for us, we our whole economy is driven on cheap debt, like free money, and we're
Yeah.
all these companies, distressed companies. Well, every company refinanced when money was free. All that
Yeah.
debt has to be refinanced right now. Our customers, where uh, our biggest risk we're finding is when that debt is getting refinanced at a much higher rate, or um, we're tracking their debt where it's trading on secondary markets through other vendors. And when you see the banks want to get out, um, that's a time when you, as a vendor, you you really need to start putting a plan together, bringing in your different directors of the business unit, saying, "Hey, your favorite customer might the banks want to fire them. We might need to think about how we want to protect Amcor here." So that's the new thing for us,
Yeah.
and coaching up um, our our presidents and different directors of these business units. This is what we have to watch out for now, which is new, and all the other things that are causing distress, inflation, tariffs, um, things like that, and just adding another piece of the data puzzle, right, to uncover which customer could be the next one
Yeah.
to cause a loss. So relying on outside vendors to help you create a predictive scoring model, right? And then keep adding more and more data and keep testing it. And then going back, we got burned a couple times. So then going back, would our model have caught this customer?
Yeah,
in time before we really um, took a big hit. So it's
yeah.
just constantly evolving as new different data points are coming up, and our vendor community are trying to make our lives easier. So that's what we're trying to do. So
Some of the things that customers have we have built for customers after they ask us for it, because they get burned by the people that they think they look good, right? Like that's like the ones that are bad. Like you get burned by them. Like, oh yeah, sure. Like those ones you can live with. So a
yep.
lot of what I've actually been working on like this past couple of months is like how do we build some of these predictive models that you're saying for the ones that actually look good when you wake up in the morning and you say, oh, these people are paying me on time and there are no problems, and like or they are paying me like they've always paid me, like there doesn't
Yep.
seem to be a problem. Like how can we predict it for those? So that's a good point. What's your what's your general outlook on the economy right now, Andy? What would you say? Like, you think it's steady? You think it's going like this?
I think best case we're steady, but I saw the Fed put in $13.5 billion into the banks. Was it last week? So
Yeah.
we need to quick go back to CRF in Charleston and have Steve tell us what's going on. Because
Yeah.
I don't think that's good when the banks need all that money, and they tried to, I don't know, from what I read, that the Fed tried to do it pretty quietly, and and may or may not have been caught. And also, everybody, why would the banks need all this money? And it's not a good sign if the banks need money. That means everything's tightening up again, and it feels like we're on the edge, right? Hopefully, it flips up and we're going good. We just um, need some noise like inflation to go away, tariffs to go away, and so we can have some long term planning and just maybe get back to normal. So without this other added stuff. So
Yeah, I have actually this because you and I we go to all these conferences and we actually have a chance to talk to people doing the legwork and the dirty work in terms of like bankruptcy lawyers or people actually doing the work and hard work like collection agencies and collection lawyers, right? Like or even Conrad for that matter, like the kind of
mm-hmm.
work that Conrad does, right? So I
Yep.
always say, I'm like, if their business is good,
Yeah, it's not good for
economy is
us.
not good. Yeah, we never know. Sometimes we come out of this, and it's always interesting. Every time we come out of this, customers do tell us like interesting things, like things that you're saying of things to look at. It's always good from a technology perspective for us because we get ideas on how to figure out. Because from COVID, I remember a big thing for us was fraud. Like, we invested very heavily on like after COVID because fraud increased rapidly after COVID, like from a payments and onboarding and customer perspective. So we had to invest very heavily in that. So who knows what comes out of this one. Which brings us to the next point. How would you say uh, uh, the professionals in the industry, whether packaging or not, but credit and AR professionals should leverage technology in this phase? Andy, like what has worked for you, what hasn't worked for you, what would you sort of advise people against, and what do you think people should have an open mind about?
Oh, sure. Yeah. I think what credit or any professional has to do right now is take advantage of technology. There's stuff that you as a manager and your team do have to do every day that they really don't like. Um, and if you can identify those tasks, and a RPA bot can do it, if AI can do it, if you can test it and feel comfortable and take some of that mindless work off everyone's plate. I mean, we need people to use their brains, and so we can trust that technology to do the easy stuff, the easier stuff. Rely on technology to prioritize what customers that you need to look at for credit
Yeah.
based on your credit score. Um, regardless of how you think, how risky they are. Your score, trust your predictive score, the secret sauce of the third party credit agencies. Just review the customers that actually would make a difference to your company's bottom line. And then at your collection team, um, take advantage of automated dunnings, using technology to do those first couple touches, pre-collection work, all the um, automatically send requests for invoices, things like that, where you want your team to actually dig in, empower them to solve the root causes of the problems, to bring cash in the door. I joke that we're a manufacturing, or we're a cash flow target hitting company that happens to be a manufacturer. That's all we do. So we just use manufacturing to hit cash flow targets, but that we need to um, very high say do ratio, right? And you need to uncover
I like that
potential
say-do
problems.
ratio.
You need to
I'm
uncover
gonna.
problems before there could be big problems, right? You don't want any surprises. You know you're going to get hit with bankruptcies and late payments and stuff, but the quicker you can identify those and adjust your models, um, the quicker you can protect Amcor, bring in higher up people that can make some phone calls at those companies to move some mountains. I think that's what we do here in credit, is make recommendations, inform people. Um, if they agree with our recommendation or not, at least they know. And I mean that's all I can do. That's what lets me sleep better at night. Um, I know like everyone's gonna lose money, but what it could hurt, at least I want to say I informed my team about it, and whatever decision they made, we all got to live with it, right? So
Yeah,
using technology to limit the exposure, and you want to believe you're going to catch all the catastrophic events, right? Or at least to the highest degree probable. So leverage technology to empower your teams. That's my quick little answer. Get rid of all the stuff that nobody wants to do. Figure out a way how to do it. So you won't be
yeah,
replaced by AI, right? You're just gonna your job is gonna be different. So technology
yeah.
just different. So
I mean, we joke about that, like, I mean, in my business too, but I'm sure in your business more so, that there are no good surprises in this line of business, and like there are only like, so you how you just want to, like you said, like you want to be prepared for that. You want to at least be able to sleep at night to say like, okay, like at least think about all the scenarios, and think about, like, so at least you can communicate and make sure that people know the risks involved, right, with the current economy. How would you say in your time, being in this industry, being in credit, or even like, you said you were in banking before, so just being in finance in general, how would you say technology has evolved? What are the key, like, changes you've seen, or some of the major breakthroughs you've seen, and that have really had an impact on your career, you would say?
sure, yeah. When I first started in banking, we can just go. I remember doing write ups, and like a interest rate change would cause a deal to fail. Like we'd be
Yeah,
presenting in loan committee, and all of a sudden the rates went up by a tenth or a quarter. Have to quick readjust everything, and then the loan would be turned down because they
yeah,
won't be able to cash flow. Um, we're sort of in that environment now, um, so that hasn't changed. We had a big um, from 2008 through now 2000 and mid 20s, where interest rates now matter, but now that technology part, there you used to just have to do everything manually, right? You might
Yeah.
get a prioritized work list, but it was just probably based on most past
Dates.
due,
Yeah.
and any communication had to be done manually. You're creating every email. You're you're having to track all the customer information in different spreadsheets and or different areas. Systems weren't talking to each other, and now that's all different, right? Hopefully, you have one ERP or one at least database that you're pushing all your customer information into a vendor's collection or credit software. So now you're getting prioritized, intelligent, designed tasks to do. Your team is more empowered. They're chasing um, dollars that actually customers that need to be touched instead of just people that would pay anyway. We're utilizing technology to take advantage of the manpower that we do have and people's time instead of treating everyone the same. You're able to treat customers um, differently, the way they need to get treated to get cash in the door faster based on a collection call or a specific credit review um, is what I'm seeing, and what I think vendors like you have solved big problems for us. So appreciate that. So it's makes the job more enjoyable when all the repetitive stuff is slowly going away. So
Yeah, and also say like a lot of it, from a just from a credits professional's perspective is you know customer relationship management, right? Like it's never, you have to call a customer to pay you money. Like, what it's not going to be a pleasant call. Like, hey, you're going late on your bills. Like, you think that's ever pleasant? But uh, I always say, like, the more you can at least talk to your customers, and your customers are going to be late. Like whether good economy, bad economy, right? Like your customers are going to be late. But if you have that good relationship, uh, I don't know if you actually know like Len from Floor and Decor, but he was on the podcast like last month, and he was saying that that he was at a prior company, and he had one of the owners. Their company sort of went bankrupt, and the owner had to go through a bad time. But then you know. When he was at the company, he treated them with respect. He had a good relationship with them, even though they went bankrupt. He sort of
mhm.
remembered them, and then he did business with them again at Floor and Decor, and he remembered Len, and he was like, "Oh, this guy is nice." And now the end customer is a very large customer, so he was
Okay,
just like,
yep,
this is, I'll give my business to these guys because they treated me well. So it's always, it's different. It's not like BC, right? It's different. It's a relationship business, so it's very
right,
important. And the more we can automate these menial tasks, the more the credit professionals and the AR team have time to manage these relationships, right? Like that they
right,
can see, okay, even though your customers there, you have a good conversation with them about, okay, like what do you think will work for you over time? Can we set you up on a payment plan? Can we give you more incentives to like, help pay us better, things of that sort.
right.
So that's a good point. Last
Yeah,
question for you, Andy.
I was
Oh,
gonna
go ahead.
say, unfortunately, our sometimes your collection team talks to the customer as much as the sales rep. So you have to, so that it's a balance, right? The negotiation, that relationship building. It even though you're asking for money, this is a company that you believe long term you still want to sell to. So
Yeah.
yeah, so
Good point. Last question for you, Andy. What would you say three key strategies in this environment any credit and AR department should have? Whether it's technology, process, people, hiring, just three things that have worked very well for you that
sure.
you can sort of make sure that the industry knows.
Yeah, you've got to. I think you got to trust your people, right? you got to trust your third party provider. And then, so that includes all the technology. And then the last one, um, man, you got to trust yourself, right? Know that you're doing all that you can. I mean,
Yeah.
we're gonna you're gonna lose money, unfortunately, but that's just the way it is. You got to believe that you're empowering your team through your vendors. You're making their life as easy, or not as easy, but as enjoyable as possible here on the job, to
Yeah.
encourage them
Good
to,
vendors.
yeah, have good vendors. So eliminating their problems, make their job more enjoyable. And then,
Yeah.
yeah, it's I have a very seasoned team, so they all like to do their own little thing a bit, even though they all collect money or review accounts. Um, it just let them do their jobs, right? But you've built the guardrails within the system, to do it the way you recommend it be done. So, um, yeah, it's crazy world out there, and you just got to believe that your people are doing well. You trust your vendors; they're providing you great service. You're getting great data, so you can protect and grow your company. So,
Good advice, Andy. Good advice. Well, Andy, thank you. Thanks for taking out the time. I really appreciate it. We really appreciate it. I'm sure that the industry is going to really benefit from your from your knowledge here, and I'm happy we were able to sort of carry on our conversation, because I really wanted to touch on this topic. Sometimes people actually don't want to talk about, like, hey, bankruptcy is on the rise. They're kind of scared about it. But we should talk about it. We should be able to have a good conversation about it. At least, like you said, like, have the strategy in place and communicate, so that at least people know what they should do in the event that occurs. But yeah, thanks again for taking out the time, and for our listeners, really appreciate you tuning in. Thank you for taking out the time to listen to the podcast. If you enjoyed it today, please go and subscribe on Apple Music, Spotify. What else we on? YouTube. Appreciate it, and we'll be back.
all right, thanks, Ali.